What's going on, everybody? Tuesday, April 22nd. So good day today. Good day. Big day. Market up. Yesterday I said we were probably reaching the end of the tax drain and we're going to have a market rally. Actually, I already said that Sunday night to my subscribers. And so we had that today. We had, over the last 6 days, 377 billion. I said it was going to be around 371 to 375 billion of tax drain. So a little bit more. It may still be a little bit more. This tax period, for some reason, was higher than the prior year, the previous year. But nevertheless, we are near the end of this April 15th tax drain. It'll stabilize. The other thing here, too, I think that I should mention, is the bilge pump. Remember the bilge pump that I spoke about several weeks ago? That was the focus of the discussion over a number of videos that I made, actually. So this reserve drain, which has occurred as a result of the taxes, that's good. I mean, that's adding some stability because, like I said, when you have a condition where the system is just filling up with reserves and those reserves need to be capitalized by the banks, it's destabilizing. And you don't have the normal functioning of treasury sales because of the debt ceiling. So this tax drain actually could have helped a little bit, maybe a lot. And that's why I think we're in the clear on this market bounce, at least probably till around May 1st. May 1st, there's going to be another tax drain, and we'll see where the market is at that time. I'm like I said yesterday, I'm closely following, because I told you guys that there's just been this very significant surge in tax deposits over the last very short period, like basically the last week. But where we went from 48 billion less last December, 48 billion less in individual income tax deposits to the Treasury, to now 80 billion more. So that's like almost 130 billion swing to the upside. In other words, a drain of the balances of the non-government, the economy, us. And it happened very, very quickly. So I'm not really sure why it happened so quick. I think it has something to do with some of these IRS extensions or whatever. But I mean, it just, if you look at it graphically, it's crazy, man. It just was like, it was kind of starting to trend up and then all of a sudden it shot way up. So I said yesterday that this raises the probability of a recession. I think it raises it pretty sharply, but I'm keeping track because the leading flows, I mean, they're still, that's a straight trend line up, and it doesn't look to me like it's going to break. I mean, that spending is fixed in the budget. I mean, unless they come out now with this new budget with net spending cuts. And they are talking about spending cuts, but again, they're going to be over a 10-year period, whatever they come up with. But they're also talking about tax cuts. They're also talking about spending increases for the border, for defense. So I don't know. I mean, but right now, all I can tell you is that leading flow, that's just going up, man. So all this stuff you hear about Doge cuts, and that's just not happening. I mean, I might be able to point out one area, which is Department of Education, where that's clearly, you see the year-over-year drop in withdrawals. I mean, that's just like very clear. But Trump didn't he cancel the Department of Education? So, I mean, it's still a line item on the daily treasury statement, but the year-over-year withdrawals are just like plummeting. Other than that, I mean, there is no evidence of Doge cuts anywhere. Now, again, I said in the past, maybe what Musk did was cancel future contracts or cancel contracts which would come into play at some point down the road. And so maybe these cuts will start to become apparent at some point. But right now, nothing. Now, there is evidence of tariffs, okay, because I look at customs taxes and those are definitely accelerating. Now, they're not crazy. They're up like something billion over last year, which is, when you're talking about net transfers of what, $1.5 trillion, $1.6 trillion, $1.7 trillion, I mean, an 8 billion increase, that's peanuts. That's nothing, okay? But I do see it. And it just started, so you got to give it some time. So I see that, and I see the individual tax deposits going up sharply. That's going up sharply. So I'm keeping my eye on that. The other thing I'm watching very closely is employment and withholding tax deposits. That's trending up too. It looks like it kind of wants to break that trend line, but it hasn't so far. So as long as that keeps trending up and leading flows, I mean, I got to stay somewhat positive still, but you got to watch it. You just got to watch it. What else is going on? So I also said the dollar was going to rebound a little bit. This bounce in the stock market, I don't know if that's, bringing back quote unquote confidence. This whole thing, it's funny because these like mini trends they always get some kind of name attached to them. Right? There was the Trump trade after the November election last year. We had that. Then we had the tariff trade. Now we have the everybody's leaving America trade. They always attach, the inflation trade, blah, blah, blah. So that's what this is right now. Everybody piles in. You understand how this works, right? I mean, the headlines are out there. Everybody has the same viewpoint because they see things through the same lens, which I explained yesterday how that's a total misunderstanding. I went through this yesterday. It's not the first time. I went through this many, many times when I talked about how is it that you have these central bankers, and they're all very highly educated. It's not like they're a bunch of, at least, in the establishment way that we talk about education. They went to good schools, they have advanced degrees, blah, 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 all that stuff. And they see what's going on. It's not like they don't see what's going on. They see what happened in Argentina, what happened in Turkey, what's happening in Japan, what's happening in other countries where the central banks are conducting policy where the outcome of the policy is contrary to what their objectives are, but they keep on doing it. They keep on doing it. It's very hard to break some kind of deeply seated belief system. You know this. I don't have to tell you this. It doesn't have to be anything about economics. It could be stuff like with your own personal behavior. If you have a deeply embedded belief about something, or if something is habitual, it's hard to break habits. And if you have a deeply held belief about something, I think in most cases, it's nearly impossible. It doesn't matter how much evidence you present to people, regardless of what the topic is. No matter how much evidence you present, they're going to ignore what doesn't align with their belief system. Otherwise, cognitive dissonance. They get stressed out. They can't handle it. It's, that becomes like a physiological thing in their bodies, that they feel the stress of that. They feel anxiety from that. They cannot go against that. It's very interesting. This is human behavior. And that's why they say it's very hard to change people, because that once they feel that anxiety, once they feel that stress, once they feel that resistance, they turn away. They go back to comfort seeking. It's like everything else. It's like building your body. It's like doing anything challenging physically or mentally or whatever. It's, comfort seeking. I would say that's like, how the universe in physics, they talk about entropy. Entropy is this tendency for things to just fall apart, to trend kind of towards chaos, to break down. I would say in the human condition, entropy is actually the opposite. It's this trend towards comfort seeking. Nothing good, folks, nothing good ever came from comfort seeking. All the good things in the world brought about by humans basically came from overcoming adversity. Not comfort seeking brings bad things, both personally and societally, in society. And same thing with economics, man. Same thing with economics. That's why I always try to tell you guys, like, you got to learn how to reframe stuff in your head. Like when you're having a bad day, and that's going to happen. Not even just a bad day. It could be bad weeks, bad months. You got to reframe that. That is like going to the gym. That's like stepping into the boxing ring. That is building resilience. That is building strength. That is building fortitude. That is building character. That's good stuff. I mean, it's not always easy. It's not like if you reframe something, it flicks a switch. Although sometimes it can have that effect. I've done that. It's not like it suddenly changes it forever, but it could give you relief for a period of time. And then you got to keep on doing that. You got to keep on doing that. You got to keep on doing that. You see what I'm saying? So anyway, I think we're okay right now. Closely watching the data, which is what Powell should say, as opposed to what he has been saying. I spoke about that yesterday. You don't go up there as Fed chief. I'm sorry, you don't go up there as Fed chief and say, well, this might happen, or that might happen, or this might happen, and freak everybody out. What kind of leadership is that? Leadership, a guy who's a leader, and let's face it, I would argue that the central bank is not a big deal, really, in the grand scheme of things. I think it's good to have as a lender of last resort and as a regulator of the financial markets if it does its job correctly. And I've had this discussion with you guys a bunch of times where it does neither of those things well. But if you're going to have it, and it's an important thing, let's call it, you want a guy who's going to go out there and say, look, we're going to watch the data and we're going to do what's necessary. Not speculate, this might happen or that might happen and freak everybody. There's no reason for that. Because he should understand at this point, maybe he didn't understand it coming into the job because he was a securities lawyer. I don't know what he did on a day-to-day basis. But coming into the job as Fed chief, you have to know already in your head that markets are driven by people and their behavior, which many times could be highly emotional, even irrational. So you're the guy out there in front of everything, supposedly. And so, and I shouldn't even say supposedly, because we know that the paradigm that applies universally, not just to financial markets in the world, but also at a policy level, the paradigm that applies is monetarism, which is basically something which is dictated by the central bank. Unfortunately, this mental illness. But you have to know that people are going to react to what you say, and you don't want to be like all over the map, because that's ridiculous. That's the reason, I've been arguing against this guy, that he should be out. He's a bad leader of the Fed. And I've been through, I said yesterday, when I was still in college, Arthur Burns, Volcker, Greenspan, Bernanke, Yellen, Powell, 5 central bank chiefs I've been through. How many of you could say that? So it's not like I haven't seen anything before. I have. And the guy's doing a bad job. But that may be the case. There's nothing I could do about that. I'm here to help you guys out, to interpret, to impart some information and understanding. So yeah, I think the coast is clear for now. We should get a continuation of this rally, at least until May 1st. Maybe some little bumps along the way, but now I'd be more inclined to buy those dips until May 1st. And by the way, that should trigger some kind of a correction in gold. I right now, I said I'm kind of like on the sidelines on that. I mean, it looks to me like I would love to short it, but it's just, it doesn't make sense, like I said, that it keeps going up, and all you have since the end of January has been liquidation in the futures markets. And I understand, I get it, that the futures markets, that's not physical gold. It's not the tail wagging the dog situation, so that could happen. But it's an odd, very curious development. So I'm on the sidelines. I like Bitcoin. I said that. I sent that out in my report on Sunday night. I think I might have even said it on, I sent it out on Friday night. We were like at, 84, 82,000 or something like that. It's like 90, 92,000 or something like that. That was one of the only futures markets where I saw money pouring in. Believe it or not. I mean, a lot of these markets are seeing liquidation. Like, what's that all about? A lot of them. Not just gold. Grains, silver, copper. A lot of markets seeing liquidation. Money coming out. Money coming out of the futures markets. Very interesting. Anyway, that's it for today, folks. Please like and subscribe. And don't forget, go to my website, pitbulleconomics.com. And sign up for a 30-day free trial to MMT Trader. I'll see you tomorrow. Bye.